So in this video, we're going to talk about Marvell Technologies, and if we go on to the daily chart, we can see that price gapped higher to begin the week as price rose $4.17 or 4.5%. So what was all the fuss and good news all about? Well, let's get into this article. It is coming from investing.com. So shares of Marvell Technology rose more than 5% pre-market on Monday after a 5-year agreement with Amazon Web Services that includes collaborations on data center, semiconductor, and cloud infrastructure technologies. Now, under the deal, Marvell will supply a range of products for AWS, such as data center, semiconductor, custom AI products, optical digital signal processors, data center interconnected optical modules, and Ethernet switching silicon solutions. Additionally, Marvell will use AWS cloud-based electronic design automation tools for silicon development. Marvell also went on to say that the collaboration aims to improve efficiencies and reduce costs for AWS and its customers, underscoring the growing demand for advanced semiconductor solutions in the data centers. Now, if we go back to the charts and if we zoom out to the monthly chart, as I like to do a top-down higher time frame analysis, we can see that the bigger picture, we had a marvelous monthly buy level that did get hit. This was back in March of 2023. And then it was pretty much off to the races as price continued to respect this uptrend line, really just having its origins from roughly $35. Now, if we scroll down to the weekly chart, what we can see was price was forming in this asymmetrical formation for the better half of about 12 to 14 months until we had a break to the downside. And many would say this was a bear trap, as you had price close below this asymmetrical triangle. Once you got a close, you saw the short sellers get short, only to be met with buyers at this weekly buy level at $55. And that was formed from this rally in price, basing candles, and then the rally higher. Now, why did price dip below the lower portion of the zone? Well, if you look at how the zone was formed, you had this hammer candle really pointing to the buyers and the unfilled orders below the lower portion of the zone, which is why price dipped below, open, but closed higher, and then we was off to the races again. Now, why did I label this $88 level as a level of interest? Well, that was the previous all-time highs back in 2022. And typically what happens is you'll have some basing, and then you'll usually have a breakout. In this case, momentum was to the upside. Now let's scroll down to the daily chart. And typically when you break through a resistance level, in this case, you typically have a retest before price resumes in the direction of the trend. Now, as you can see, the moving averages are starting to spread out, and that's an indication that price is getting overextended. However, the charts are suggesting look for your next target to come in at the $100 level before a pullback to allow the moving averages to catch up. And so what I would anticipate is this type of formation occurring before the eventual move higher. Thanks for watching. Subscribe. Please like the video.